Welcome everyone to Tax Talk Canada, where we answer your biggest tax law questions. Today, we're speaking with Charles Haworth, a partner at Radnoff Haworth. Charlie, one of the questions we often get from our subscribers about tax law is, what are the main audit risk factors for Canadians?
So there are a number, and it really depends whether we're dealing with someone like your personal taxes or your business taxes. But primarily there are a couple that are pervasive on both sides. Number one is you file your taxes and it results in a refund. 90% of the time, CRA is going to send you a letter saying, we're going to review your taxes to work out why you're getting this refund. I wouldn't really expect anything less from them, otherwise they're just handing out money. Number two is you haven't filed your taxes and you file a number of years at once. And that normally results in the CRA reviewing all of those years at once.
Interesting. That makes a lot of sense. In your experience, people doing multi-year returns or somebody getting a return who might not typically get one is a flag for the CRA to review their profile.
Yes, like the way I like to think about it, and this is how I explain it to my clients, is CRA doesn't have 10,000 people reviewing your returns when you file it. You're filing it electronically, you're filing it in paper. They have people putting it into a central mainframe. And then that computer is spitting things out to people to review in person. So if you have a big change, one year you're earning 100 grand, and then suddenly you're earning zero and you have $50,000 of losses, that's going to get red flagged and it's going to be sent to a human to review, essentially, and that's how I understand it to work.
So, really big changes from year to year.
Big changes from year to year, refunds, and the other issue is they just have these, what's known as kind of programs. So every year they might say, we're going to review real estate agents this year, or we're going to do this kind of profession this year. And then the program for every year is cash businesses. So are you a cash business? And if you are, then you're more likely than any other business to get audited regularly.
In that context, you talked about some of the differences between personal and business audits. What can a business do to minimize its risks of being audited? Outside of what we've just discussed, as far as making sure that there's not much difference between year-to-year returns.
So the easiest way for a business to deal with this is you've got to assume you're going to be audited. And you can't avoid it. CRA can just randomly decide to audit you. So what you have to do is you have to make sure you have proper books and records. And so you have your general ledger, you have invoices, receipts, everything supporting entries in the general ledger, because an audit can be as quick as, can you give me your 5 biggest expenses with supporting documents? And if you produce that to them right away with the supporting documents, they just say, okay, you look good, we're not going to go any further than that.
So, the number one priority for a business would be good bookkeeping.
Yeah, good bookkeeping.
Interesting.
And, I think more than 90% of I wouldn't have 90% of my clients if they had kept like a proper bookkeeper or found someone they can rely upon.
Now, the same question regarding personal audits.
So it really depends on if you're a T4 employee, the likelihood of you being audited is almost zero. And that's because your employer is the person doing the deductions, you just get the net income. And so as long as you're not kind of involved in any strange tax schemes where you're claiming business losses and you're a T4 employee, you generally won't, you might do your whole life without being audited.
What do you recommend for someone in that situation to minimize their risk? In the case of a freelancer who may not necessarily have a business but doesn't submit a T4.
Well, they're a business. So same advice for them. But good bookkeeping. Make sure you have your records. Make sure you have your processes in place for your receipts. And one of the biggest issues that people have is they commingle. So instead of having a business account and a business credit card, they just all use the same personal accounts and personal credit cards. And then you have to spend the time pulling each one out and then doing your kind of redoing your taxes that way. So keep things separate. Have a separate business account, have a separate credit card, so that when CRA comes along, you can say, I only use this credit card for business.
So, maintain a separation of church and state. Interesting.
Don't commingle. That's a big one.
Charlie, Thank you again for your time today and your great answers. I'm Brianna Fox, and this has been a Tax Talk Moment. Don't forget to like, follow, and subscribe.